Are we heading for a $35 trillion financial crisis? And could Bitcoin be the solution? BlackRock, one of the world's largest asset management firms, recently revealed that it is preparing for an event of this magnitude and that Bitcoin could play a crucial role in its strategy. But how does all this connect, and what does it mean for the cryptocurrency market? Hello everyone and welcome to our channel dedicated to the world of cryptocurrencies. Here you will find market updates, project reviews and advice to help you make informed decisions in the world of cryptocurrencies. I invite you to follow me on the channel to always be updated. In this video, I walk you through the latest news and analysis on Bitcoin, and most importantly why BlackRock's involvement could be a game changer. We will also discuss how Bitcoin could continue its uptrend, provided it breaks certain crucial levels. Let's get started. Before we delve into the details of BlackRock's bold moves, let's take a look at the current context by examining the market. Bitcoin has been stable above $64,000 in the past few days, although it has failed to break above the $66,000 mark. On the other hand, Ethereum is gaining ground, registering a 4.49% increase and currently trading at $2,554. Overall, the market is moving slightly in the green, with Bitcoin remaining relatively stable. One of the key aspects we need to look at is Bitcoin's recent trend line. As I mentioned in yesterday's analysis, Bitcoin has broken a major trend line, and this could be significant for its future price movements. The next crucial level to watch is $64,260. A close above this level could be the catalyst for further upside. Conversely, a failure to break above this level could signal a possible correction. In terms of liquidations, a lot of attention is focused on the $65,000 to $65,400 range. Why is this range so important? This is where a lot of liquidity has accumulated, coming from orders that triggered Bitcoin's collapse from $64,000 to $52,000. Breaking through this liquidity cluster could pave the way for a significant price increase, potentially toward previous highs. However, it is crucial to proceed with caution. If Bitcoin fails to close above key resistance levels, we could see the formation of a double top pattern, which could lead to a continuation of the bearish pressure. As the weekend approaches, remember that traditional markets will be closed, meaning institutional investors will have less influence. This often leads to lower trading volumes, which can create unpredictable price movements. Looking at the bigger picture, Bitcoin has performed well over the long term. The monthly chart shows that much of the overlying liquidity has already been absorbed, which could support further upside momentum. But there is another critical area that requires attention: the liquidity between $70,000 and $72,400. Specifically, we are talking about a leveraged liquidation of about $20.68 billion in this area. To recover, Bitcoin will have to capture this liquidity. However, if Bitcoin were to retrace its steps towards $52,000, we would see a liquidation of approximately $2.35 billion in long positions. On the other hand, if the price were to reach $71,000, it would only trigger approximately $3.09 billion in liquidations. This discrepancy indicates an imbalance in the market, especially in terms of long positions. Now let's get back to the news that shook the market. BlackRock is preparing for a financial crisis by incorporating Bitcoin into its strategy. The company has identified an impending $35 trillion crisis linked to the Federal Reserve's monetary policies. BlackRock believes that Bitcoin could act as a hedge against inflation and economic instability. Why does this matter? BlackRock is a giant in the global financial system, managing trillions of dollars in assets. Their endorsement of Bitcoin as a potential solution to a crisis gives the cryptocurrency a level of legitimacy it has never had before. If institutional giants like BlackRock are positioning themselves for Bitcoin, it could be a sign of the beginning of broader adoption in traditional financial markets. This move comes at a time when we are seeing central banks around the world adjusting their monetary policies. For example, the U.S. Federal Reserve, the European Central Bank, and the Bank of England are all adjusting interest rates and implementing quantitative easing to counter the economic effects of the pandemic. As liquidity increases in traditional markets, it could also flow into cryptocurrency markets, pushing Bitcoin higher. Turning to Ethereum, it has shown signs of recovery over the past 24 hours, although it is still lagging behind Bitcoin. Interestingly, Ethereum's price action has formed a higher low on its daily chart, suggesting that a bullish reversal may be in the works. Using Fibonacci retracement levels, we can see that Ethereum has retraced slightly below the 0.618 level, which often acts as a strong support zone in uptrends. If Ethereum can hold this level and break its previous highs, we could see a continuation of the upward move. That said, Ethereum still has to clear key resistance levels, especially around $3,000, before we can expect a sustained rally. Failure to clear these levels could lead to continued sideways trading or even a correction. As we approach the close of Q3, we are entering a period that has historically been bullish for Bitcoin. The last quarter of the year has always provided some of Bitcoin's best performances, especially in halving years. For example, in 2020, Bitcoin saw a 68% gain in Q4, while in 2016, it saw a 58% increase. Since we are in a halving year, the odds are in favor of a strong Q4 performance. In addition to seasonality, other factors such as central bank policies and liquidity flows will continue to play a crucial role. As we have seen with recent interest rate decisions by major central banks, monetary expansion could fuel the final stretch of Bitcoin's bull run. With more liquidity on the way, Bitcoin could be poised for one last push higher. Additionally, it is crucial to keep an eye on both Bitcoin and Ethereum as we approach the final months of the year. Between BlackRock's disclosures and the broader macroeconomic backdrop, there are many reasons to be optimistic about Bitcoin's future. With that said, thanks for following us this far. Don't waste your next crypto flight. Thanks for being with us. If you want to stay updated on the latest news in the crypto world and not waste a crypto adventure, hit that follow button and activate the bell. Ready to go? Then see you in the next video.